Thanks very much. Thanks for coming. People are going to be coming in and out because of classes. Welcome to those that are live streaming. And thank you all for coming to hear just an incredible leader, speaker, and investor. Let me first introduce a few VIPs, starting with Christine Anderson, who runs all of the marketing and branding and communications at Blackstone. She's been there 17 years, and she's one of the most senior people in her field anywhere in the world in that space. And then Solis Doyle works with Jon, and there's amazing, I emailed Jon to ask him to come. I'd be delighted, and he asked Solis Doyle. My daughter went to school with Solis, and so when you're running Blackstone, I hope you remember me. And then Mark Duber is here, former chairman of the board and current trustee, and Alan Meltzer is here. Alan is also on the board. He supported the Meltzer Center, which is amazing. And he also, this is part of the Alan and Amy Meltzer speaker series, and Alan has made it possible that we can get amazing speakers like Jon Gray here. So I'm going to interview Jon for 30-ish minutes, and then we're going to open it up to student questions. Let me tell you a little about Jon Gray. He grew up in Illinois. He went to the University of Pennsylvania. He was an English and economics major. He got a job. He met his wife in a poetry.
Romantic
poetry. So we'll have to get into that. Went to Blackstone as a 22-year-old in the private equity business. The next year, they decided to start a real estate business. Now, most people in private equity there's this hierarchy, you know, we're better than real estate and better than investment bankers. But so, oh, Ellen needs to hear, okay. Jon raised his hand and said, I'd like to go there. 12 years later, he's running the business. And then he basically built the largest real estate business anywhere in the world for any company. And now he runs the largest alternative asset firm, the largest real estate business in the world, the largest hedge fund in the world, the largest private credit business in the world. And he's also just an incredibly kind person. So thank you very much for coming.
Wow, thank you. Dave is a very good man, by the way. We've known each other a long time, so it's an honor to be here. Thank you all for coming out.
So my first question is, I always like starting.
Very good man, by the way. We've known each other a long time, so it's an honor to be here. Thank you all for coming out.
So my first question is, I always like starting talks like this with a bar mitzvah question. So you received some stock at your bar mitzvah, and you invested in.
I did all right because it was mostly things I knew, which were Coca-Cola, Nike.
Okay.
So I think that turned out okay. Probably the most important thing is those stocks I held on to till I got engaged with my wife.
Okay.
And then I had to clear everything out to buy that engagement ring. There were no lab-grown diamonds at the time. So the best in those stocks is they compounded and allowed me to execute the most important decision of my life.
Okay, that's good. Then how did an English and economics major end up at Blackstone? And what did you say in the interview that kind of convinced them that you were qualified to work in a
financial firm? Mm-hmm. I don't know. I fortunately, the summer before I got the job, I was helping run the small day camp in suburban Chicago, Camp Kawamba. But I don't know. I fortunately, the summer before I got the job, I was helping run the small day camp in suburban Chicago, Camp Kawamba, but I also worked at Lehman, the brokerage firm at the time, downtown.
As an intern.
As an intern, as a summer intern. And I think that combined with this sort of unique background of an English major and in finance, I was able to tell a good enough story. And I just think, you know, at Blackstone in particular, I had a friend, David Blitzer, who just retired from the firm. We had a mutual friend in common, and I don't know, it just sort of clicked. And what was exciting back then was the private equity business didn't really exist. The business, people were talking about it, and this was the only firm in the space that was hiring straight out of college. And so I often say that luck is a core competency for me. And I happened to get this job at Blackstone in retrospect at exactly the right time, initially in the M&A and private equity area, but about a year into it.
Can actually do something in real estate when you had no real estate?
Yeah. Basically, at the time, I was helping them write the pitch book for the first fund in real estate, and they were looking for resources. And I'm not sure if I raised my hand or they tapped me on the shoulder, but I think for me it was mostly about the fact that I could avoid going back to business school, because at the time the standard was I was supposed to go back,
Right.
and this was an opportunity to stay at the firm and keep working. And I don't know, I guess I was just intellectually curious enough, and real estate had collapsed at the time, and I didn't think this was a permanent gig. I thought I was just gonna go work and do this for a year or two, and then we'd see what happens. And it ended up becoming a full career for me before I got this job back in 2018. So I think that, for all of you, I think being intellectually open, going for new places, living in different places, not necessarily saying like this is the career, but I think that willingness to jump on a different train and then help to build a business that didn't exist, that turned out to be a good decision.
So tell us where Blackstone is today. It's basically blowing away. This hurts as a Carlyle guy, but the competition. When I started at Carlyle, we were both $70 billion in AUM, and you've done pretty well. So tell us about the business. Like, how big is it? What are the biggest parts of it?
So the business today is $1.3 trillion. It's gotten a lot bigger than you would have imagined. When you think about when I joined the firm, it was $750 million in equity. So it's pretty dramatic change. It is roughly, $500 billion credit. Dramatic change. It is roughly, $500 billion of credit, which didn't even exist at the time I joined. It's probably $300 to $400 billion of private equity and also of real estate. And then it's a little less than $100 billion in hedge funds. And embedded inside of those businesses are, within private equity, there's growth, there's life sciences, there's infrastructure, there's secondaries, there's sort of the whole gamut of activities. So what's nice about the job is everything, and by the way, it's global. So it's Europe, it's Asia, it's the United States, and it's all these different areas. And probably the best thing we get is the ability to see the whole world and then take that informational advantage and translate it into investing advantages. And so, yeah, you can see what's happening in the demand for digital infrastructure or power today and think about, well, I'm seeing that here, that should happen in a different geography. And you can see that across asset classes. So it's a very big place in the sense of the scale we have, and yet we still run it a bit like a small business.
So you started off as an investor. How would you describe what you do today? Are you an investor? Are you a leader? Are you a communicator? How would you describe who you are today?
I guess I would say today I'm still an investor first, because it's a little bit like running a pizza shop. You can have beautiful music and background good and whatever, but if the pizza doesn't taste just like mad. So I don't favorable net returns for our customers. Doesn't matter. So I spend my weekends reading investment. I think that is the most important function. But to your point, you've got to be more. You've got to be a communicator, because you give your story to the world. You have to be talking to shareholders. You have to be traveling. I was just in the Middle East for 10 days talking to investors. You have to be meeting with portfolio company CEOs to try to convince them to work at the businesses. You know, you have to be thinking about strategically new places you're going to raise capital. You have to make hard people choices too. It's a little bit of everything. And by the way, just backing up, because not all of you may be familiar with alternative asset management, basically what we do instead of buying stocks and bonds is we invest in private assets for the most part. So real estate and credit, private credit, infrastructure, companies. But I would say it's a little bit of all these things. But I would still think of myself as an investor first. But I would recognize that communicating it has increased as on large more constituents, and it's more mobile. So part of the job today is reach to a lot of different audiences. And you can't just do one thing. I think in these kinds of jobs, you've got to be able to be a multi-tool sort of athlete.
So we have a video of, one of the things you've done is you travel a ridiculous amount. Like how many days do you sleep in a hotel?
A lot.
Okay, so when I was in private
It's a bit
equity, I
sad.
did maybe 100 hotel nights a year, which was a lot. And you were 150?
Yeah, I don't like it.
Okay.
It's a little
But a lot.
depressing,
Okay.
but a lot. But my dog's always happy when I come home.
Okay. So let's video just to see one of the ways that Jon has communicated.
Hello, Down Under. I'm in beautiful Tuesday morning. I'm still in Abu Dhabi, still running. I'm in Doha. There's Rafiq. It's raining Thursday morning. Saudi Arabia. Magnificent Tel Aviv. Still running. We're running through the campus of University of Toronto. Running.
So, I mean, you're also a social media phenomenon. So how did these videos develop? And Christine Anderson manages Blackstone's brand. I think this is a wonderful brand attribute because it creates humility, it makes you accessible, allows people to your personality. Start, and how does it project your personal brand and brand?
So it's all a little bit. I think back in time, to Christine's credit, she said, you know, you should go out on LinkedIn. It's not social media where you get all the hate. You can communicate with people and get out our messages and so forth. And I was resistant, but ultimately a couple of years ago, I sort of relented and said, okay, I'll do this. And initially, I think I did sort of standard posts, like I'm at a corporate event and you put it out there and it's sort of boring. And I was in Sydney, and I often would send videos to my wife and 4 daughters, just say, hey, I'm here, look at this cool spot. And instead of doing that, I did basically for a broader audience. Hey, I'm in Sydney. I think this place is coming back from COVID. We've got great people on the ground. We own some wonderful businesses in this area, and whatever, I'd recommend you come here, whatever. We put it out there, and it just sort of went viral. And I was like, oh, wow, that's not hard. I can do that in lots of different places. And what I began to find was our customers were watching this. We're reaching a broader and broader audience. And we made it human, also had a bit of content in there, like we could deliver messages. And one of the challenges today in the media landscape is it's very hard through the written press to convey a message. Even when you go in, you know, they're trying to make news. You don't come up sort of as yourself. You're sort of in the chair and you're dealing with tough questions. Back in time, we had a couple hundred customers, like Carlyle did. Most pension funds, sovereign wealth funds, some university endowments. And now we have 300,000 customers, individual investors around the world. And so you just see and I think social media has a lot of ills, but this is a way in finance. I was at a Jersey Mike's, and we happen to own the chain, and our equity bid one in a couple of weeks, all this software concern, and I recorded a little video, and So I think it reflects sort of new modern communication, and the keys to being as real as possible. You know, you're out there, you misspeak, you know, you do see less, the more real it feels, the more people are willing to trust you. And if you think about it at its core, what we do, it is an awesome responsibility. We're in the trust. You're giving us capital, asset class for 10 or 15 years. You need to trust us. So if you can care, which we do desperately, and the thing I love about the firm is we have all these amazing people. They're so high quality human beings. If you do that, that's helpful for your business.
The amazing thing is that you also said, send these to let my family know where travel in this business is relentless. And my wife is here, but I mean, I went to China 75 times. There were times when my son would call me and he'd say, "Where are you? Are you coming home?" And I'd say,
I'm at breakfast.
"I'm in China." And he would say, "You forgot to tell me you were going to China."
Yeah.
I was going up for lunch.
Yeah.
You know, it's just, so, all right, let's get into the business. Start with a high-tech area of your business. You are the largest owner of data centers in the world, which are being fueled by AI. So what do you see in that business? And then there's now growing controversy and backlash, and how are you managing that?
Yeah. Well, I think we should step back and just talk about what's happening, which is we are on the cusp of a very profound technological revolution. That the idea of super intelligence at massive scale and low cost, that is a really profound thing. You know, the pencil can sort of write itself. You guys all use this. I mean, it's amazing, and it continues to get better and better. To make this AI a reality, it needs physical infrastructure, sort of the new railroads of this century. It needs chips, it needs data centers, and it needs power. So if, as an investor, you said to yourself, how can I play this without taking on enormous risk? It's a bit of the picks and shovels, right? You're not looking for the gold yourself, you're providing the tools for others. And the data centers, we bought a company back in 2021 called QTS for $10 billion, which really got us into this in a big way. AI was just beginning. But it quickly became apparent
So that was way before ChatGPT became.
Yes, and at the time, that wasn't really the driver. We just thought that cloud migration would mean you needed more capacity for compute for that back then. But we quickly saw what was happening. And we said, you know what? We should buy more land, get more entitlements, get more power. And we started growing this business. And the business has grown 15-fold. And it will grow to be, it's become for us the most profitable investment of all time. And the key is that the hyperscalers, the biggest tech companies in the world, need these AI factories. And so what I like about the business is, for the most part, you are not spending real dollars until you have a long-term lease with a company that is very large, that has a market cap of $500 billion to $4 trillion. So, and they're signing this 15, 20-year lease, and that gives you your security. And it seems like a very prudent way to play this. Now, your questions, which are around, there are multiple questions now. Is this causing electricity prices to go up? And interestingly, if you look at the places in America over the last 5 years that have the biggest increase in electricity, it hasn't been correlated with data centers. It's been the opposite. It's actually been about restrictions to certain access to certain types of power. We can talk about that. Nevertheless, I do think it's important as part of the data center build out to make sure that consumers are not paying for this, that they're protected in this context. I also think there are environmental considerations. I'd say the good news is the technology's gotten better and better such that the water usage now is much lower than I think most people expect. But whenever you have large physical assets, big things happening, there are going to be questions. But I would say, given the amount of compute we're all going to use, the autonomous vehicles, the robots, all going to have our own agents or multiple agents, I think we are going to see many more data centers. And it's not just in the US, we're building them at scale in Europe and Asia as well. So I think this is a powerful trend, and I think it will continue more than most people expect.
So we're very focused on AI, and we're also very focused on sustainability. We get these questions all the time. I ran a data point the other day. The amount of water that all data centers in the United States use annually is less than the amount of water that the golf courses in Palm Beach County use.
Yeah.
So there's this perception that...
And then I think it'll be a similar perception around usage and power, because I think we're going to see, there's this term, when I was in college, it was bring your own beer to the party, to the fraternity party. Now it's bring your own power.
They just study here,
yes,
they don't know
yes.
that, but yeah.
So you've got to bring your own power today in a lot of ways. And so I don't think the data center, which in some ways is being villainized, that's the right. I think the bigger questions here will be, what kind of disruption does it create? What does the job market look like? These are the sort of existential questions that come out of this. But I think there are going to be some amazing benefits from this. I do think for human health, the ability to come up with cures is going to be exponentially better than what we've experienced in the past. I think there are going to be a lot of tasks that people don't love doing that will be automated. I think there'll be a lot less friction in a lot of things. But there are a lot of important social questions that come. But I think this physical infrastructure will continue to grow. But yes, I can see that it has to be done in the right way.
So do you own the land, the building, the service? You don't own the chips?
No. For the most part.
The clients put the chips?
The clients will, and there's all different types of financing. In some places we finance chips, but typically the hyperscaler buys the chips, let's say, from NVIDIA, and then they use that compute to do whatever they're going to do. And in some cases, they're giving the compute to some of the other large language models who are subleasing for them. It gets complicated. What I will tell you today is there is a shortage of compute.
Got it, okay. Let's go to maybe the next most profitable investment. I didn't know the QTS, but which was Hilton. So you invested, I think, $5.5 billion in Hilton originally. It was the biggest equity check any firm has ever written in the private equity history. And then you ran into the financial crisis when and basically it was about to go bust. And then you, instead of most people saying, all right, that didn't work, you doubled down, which a lot of people thought was crazy. So what happened there, and how did you manage that?
Yeah. So we bought Hilton Hotels in the summer of '07, committed, closed in the fall. It was about as bad a timing as you could shoot for. And as I often say, by all accounts, I shouldn't be sitting here today. But we bought what we thought was a pretty special business. We have an amazing CEO who's continued to be the CEO, a mutual friend, and Chris Nassetta. And what happened is we went into this financial crisis, the economy turned down, global revenue in the hotel business went down by 20+%. This company's cash flow fell by 40+%. And we had put on the $26 billion deal, $20 billion of debt on the company, which in retrospect was probably a little too much. Okay. The good news was we believed the downturn was cyclical. We had a great management team, and we decided to reinvest and deleverage the company a little bit at the bottom of the cycle. Ultimately, we came out the other side, the cycle turned, we took the company public, we broke it into 3 companies, we ended up making $14 billion. It was a huge success. At the bottom, by the way, by the beginning of '09, we'd written the investment off by 71%. So the $5.5 billion was written down to about $1.5 billion. And so, but what I was going to say was, that turned out to be the most formative thing for me in my career because, one, it gave me this idea that you've got to try to find a way to maintain equanimity in the face of very challenging moments. And two, it also led to this conclusion that maybe we spend too much time obsessing about whether we pay 99 or 101, but instead we should try to find great businesses and what I think of as great neighborhoods. In this case, an asset-light management franchising business that plays off the continued growth for global travel, that finding that really matters more. And I think about it in an investment memo, that first paragraph matters more than page 52 of the model with some sensitivity. And so for me, that became formative in thinking about being more thematic in deploying capital, which brings you to things like data centers and energy today.
So speaking of communications, how did so in private equity, big limited partners entrust you with money and they're obligated to fund, okay? So I'm just putting this in my head. You go to a big investor, a CalPERS or an insurance company, you say, good to see you. I just lost 70% of your money in a year, and now I need more of your money. How did that go?
That's not a fun conversation. The good news is these are drawdown funds where you have the discretion to pull the capital down. So they don't have the opportunity to say no. And so, nevertheless, they're your clients and you want them to understand what you're doing. And so we made the case that this was a very sound business, that this was a cyclical downturn, and we thought we were going to get to the other side. And we needed to do this to preserve our capital. By the way, the other key thing I learned from the Hilton experience is you have to have the ability to get to the other side. The problem as investors is you buy a great company or real estate or infrastructure, but because of leverage or something else, you're stopped out and you can't make it to the other side. And that almost happened, but fortunately we had the access to capital. So I think the hard part was less about drawing additional capital, just more the sheer sense of disappointment that our clients felt. And it's kind of a lonely feeling when you've been responsible for making a large investment and your clients, your colleagues, and everybody in the world thinks you're an idiot.
Right.
That is not a great feeling. But we ultimately had conviction in the business. Now, it doesn't mean every investment's going to turn around. I mean, you could have bought a movie theater chain or something, pre-COVID, or, department
We bought
stores.
AMC, and it didn't turn out that well, but yeah.
But in this case, we had the courage of our convictions. And so I think the key thing, and this is so true in investing, is you're always tested about, is something happening cyclical or secular in nature? And so right now we're watching on the screen all these companies sell off. They're all going to be disrupted. And yet the reality is they're probably going to be a variation of outcomes. And we've got to keep our wits about us and figure out, where do we think things are oversold? And by the way, we saw this after COVID, we saw this after rates went up, we saw this certainly post-Liberation Day. And so sort of having a steady hand on the tiller and being very analytical, that is super important in this kind of business, particularly if you go into liquid investing. But I think having a long-term approach and not letting the noise pull you off course is so important.
Let me ask you about another investment. You were an investor in a company called Bumble. Anybody familiar with that? Okay.
This is the right cohort.
Okay, so I happened to be doing some research, and I went to a place I read a lot. It's called the everygirl.com, okay? And it's
Where
30
is this going? I'm getting very nervous.
30 Bumble openers that are way better than Hey. Okay, so I just want to ask you how you would answer a couple of these questions.
I've been married for 34 years. 30 years, same woman, 34.
Okay, so first question is, what's the last thing you binged watched?
Me, Landman.
Landman, okay.
I recommend it. I think it's very good.
Okay. How about,
Is that a pickup line?
I guess it's better than, I don't know. My wife and I picked these out this morning, and so I was not that good at dating when I was these folks' age, and I got lucky with one person, so I don't know. But, all right, let me go to the next one. Is this resonating with students? Okay. Okay. Are you a Sunday reset or Sunday fun day type? Good question, good pickup line.
I think I am a Sunday reset. I'm getting ready for the week ahead. I'm reading lots of documents, so that definitely puts me in the reset category.
Okay. And then if you could listen to one musician for the rest of your life, who would it be?
Well, that's a good question. I love the Beatles.
Beatles, okay. That's great.
If I
All
just
right.
had to listen, I know that dates me for this crowd.
Okay,
but-
well, I hope this is the first time someone's asked Jon Gray some Bumble questions.
Yes.
Okay, good. Let me ask you two other questions. AI. So we are all in on AI. We won an award for being the best program in AI in the country. We're proud that we're ahead of more prestigious schools like Stanford and MIT. How is AI affecting the way that Blackstone does business and the way that you're approaching investing?
So this is a real-time discussion because if you go back to the earlier comments, the whole economic landscape is changing. So from the investing standpoint, what we're saying to our teams are, you can't assume the status quo holds. If you're deploying capital in the first page or two of your memo, you must address how the AI may impact this business. If it's Jersey Mike's or if it's an apartment complex, it's less so, but there are plenty of businesses, obviously, where there are big impacts. So force everybody to focus on it. Make sure that our companies are thinking about it. So keep convening the leaders of these businesses to talk about it. We had the CEO conference in the fall of all our portfolio companies, and it was like an AI convention. We hired to oversee our portfolio operations Rodney Zemmel, who ran AI at McKinsey. Try to deploy resources at our portfolio companies so they can improve in content creation and customer engagement and make themselves better to protect themselves against competitors. And then at the Blackstone level, coding, summarization of all the great information we've got, try to figure out how we can use these tools to make us better. We've done a little with memo writing, try to, interestingly now, before I write questions to the group on a memo, I'll put it into Copilot and check it, because maybe the answer is already embedded in there. But I think it's a mindset that you're an organization where you fundamentally believe the AI is coming and you need to look at everything through that lens. And I think that's a little different than a lot of places that this is some bubble. No, this is coming, it's real. We need to figure out how to deploy it. And then on the investment side, back to the earlier conversation, the infrastructure, owning things that we think are more AI resistant, and then get some exposure to some of the fastest growing companies out there. So invest in Anthropic or OpenAI or some of the application software companies that sit on top of it. Have a real openness to some of the change that's coming. So I'd say it's multi-level and it's embedded in almost everything we're doing these days. It sounds like you guys are thinking about it in a similar way.
Our view is very similar, that every student should be fluent and literate in AI in any field they want to go into, whether it's marketing or finance, and that will give them a leg up when they're looking for jobs and also performing. So,
Yeah.
All right, so my last question is advice. So I saw a data point that said that last year you had 57,000 applications for 138 entry-level jobs at Blackstone. So what's your advice if someone wants to get a job at Blackstone?
It was much easier in 1992. Look, my advice to get a job in Blackstone would be to work as hard as you possibly can here and get the highest grades you can to put yourself on the playing field. That's not very complicated, because when you have a firm that has the luxury of selecting a small percentage of people, you need a way to screen that. So you need people who are high achieving. You know, I think just like getting into college, showing that you do other stuff, people involved in athletics or other activities, says something about that human being. They're all in. And then, you know, you apply initially for a job, and you go into the thing and you look at, oh, I'm interested in credit, or I'm interested in, you know, accounting or whatever it is. You apply for that. Hopefully you get an interview, this sort of thing. And if you don't, maybe you go work somewhere else for a year or two and you come back and try again. And I think, to me, though, that the really key thing, whether you work at Blackstone or wherever you work, it is about going to a place where you're going to learn a lot and you're going to really be passionate about what you're doing. I think for me, one of the reasons I've had a fair amount of success is because I fell into this investing business, which I really love. And I've been at a place where there are lots of really smart, hardworking, high-quality people, and I love the intellectual challenge every day where I'm trying to figure out where the world's going.
That's great.
And so I think that's the kind of thing you're looking for, be it at Blackstone or wherever you go. And we definitely recommend you apply to the firm. We want as many talented people as possible. And I would say, working at a place, and I'm sure you experienced this at Carlisle, with really talented, great people, makes it a lot of fun.
100%. Yeah. All right, so we're going to open up to student questions, and let's start here with Caleb. And just introduce yourself, what year and what you're studying.
Yeah, of course. So, hi, John. Thank you so much for this chat, by the way. I'm Caleb, and I'm a fourth-year business administration student here at Kogod. And just a little bit of context for my question first. So I actually live in Loudoun County, near where all the data centers are at with my family. And I commute there from school 4 days a week. And so I'm seeing in real time all these data centers are being built out, even QTS.
Yes.
And I hear how people think that one of the solutions to this is actually taking this infrastructure, especially data centers, to space. And so I was just curious to know your thoughts on the space economy over the next 10 years. What do you think that will look like? How do you feel like data centers will play into that? And I'm just curious to hear all your thoughts on that.
Well, I wouldn't profess to be the expert on space, but I would say a couple of things. One is we do have a small investment in SpaceX. And what Elon Musk has created is pretty incredible. I think on the communication side, space is going to be very, very powerful. And I think if you've utilized this Starlink system, you get a sense of that. I think on the data center side, if Elon says it can happen, it probably can or will happen. I think the economic challenge is the GPUs have a useful life typically of about 4 years. So how do you replace them, or how do you amortize the cost of that launch? There are also some communication challenges. So my guess is it probably happens over time, but it still feels like the data centers for the next 5 or 10 years are more likely to be terra firma. But I would not want to be the one to say that's the case. But at least when I ask our experts in the firm, that's what they say.
Okay, good question. Yeah, just introduce yourself and.
Hi there. I'm Adrian. I'm a first-year undergrad business analytics and AI major. And I had a question, like, looking back on your experience or even your college life, did you have, like, I don't know, a book or resource that you go back to or you read that changed your thought outlook or your, like, evaluation in terms of, like, investments and stuff like that?
I don't know if there was, it's funny, I'd say a couple things. I took taking statistics and accounting and all that, not the most exciting things, was pretty foundational in business school in Wharton undergrad. So I think that was helpful. You know, I would say taking all my English classes, which was, I think, very good from a communication skills standpoint, and I think that's underrated. I mean, one of the challenges we have sometimes is people are very smart and very analytical, and they'll write 70-page memos, and I'm just like, could we do that in 2? And could you get to the key points right up front? So I think reading and being able to communicate effectively is a powerful tool. Back to my wife at the beginning of the story, we were both writing our final paper on a book called Pamela, which was an 18th century British, maybe 17th century epistolary novel. It doesn't really matter. But that book proved to be the most important because we were writing the final paper on the same topic. So there you go. But I would say in general, reading the newspaper, being informed about what's going on, and then learning to have pretty good communication skills. I think public speaking is an important skill, not something that I had initially, but I've had to develop on the job. And then, yeah, learning how to write in a concise way, very helpful.
Thank you.
Okay, good question. Over here. Just introduce yourself and...
Hi, I'm May. I'm a fourth-year accounting student at Kogod, and Dean Marchick kind of stole my question about AI usage in your industry, but I have a follow-up question on if you have any concerns or reservations about AI usage in the business community.
Well, my biggest concerns around AI usage, obviously, when these things become more and more human-like and we have more and more interactions, particularly with children, I have some concerns, and I think the industry does too. There is this question about what is the job world going to look like, and I think we're going to have to see. My hope is that there are all sorts of jobs that we can't really envision that are going to come from this. I worry about bad actors using this technology in a lot of different ways for crime or for getting out into the sort of world information, in a way that's destructive to society. I think it is dangerous when you have this much intelligence that's accessible. On the other hand, as I said, I think it's going to also lead to some amazing things that'll improve our quality of lives. So I think how we regulate it, see it, I think it's going to be a challenge. And I don't know all the answers to how this is going to play out. But I do think we have to recognize that it is very powerful. That's for sure.
Good question. Over here. I'll come back, but we're just trying to mix it up a little.
I just wanted to say thank you so much for being here. We really appreciate it. My name is Isabella. I'm currently an undergraduate student at AU. I'm studying finance. And I just had a quick question, if you don't mind taking the time to answer it. I wanted to ask, have you noticed a shift in how younger professionals are responding to setbacks right now? And how do you work to cultivate, resilience without really lowering expectations?
It's a great question. Yes, I would say we're all, I think, a little bit guilty as society's evolved. When we grew up, we got to school, we were supposed to be home for dinner, nobody knew where we were. We had to figure a lot of things out ourselves. If we went on a trip, we went on a trip. When I was in college, there was a phone on the floor, and you would call Sunday night after 8 or 9 p.m. because the long distance rates were the lowest.
My dad still calls me on Sundays.
Thinking it's
tell him,
cheaper.
You can call me anytime,
Yeah.
Dad. So,
Yeah. And when I think about the contrast between the way I communicate with my own children, how often, which of course I love, but it does have a tendency to reduce independence, right? To your point, which is if you're on your own, you have to develop a certain level of resilience. And so I think however you can find that. And by the way, if I was saying in life, if there were qualities that were most likely to help you succeed, it would be resilience and optimism. Those would be the qualities that would really matter, because whoever you are, you're going to have setbacks. I think part of the reason we love watching the Olympics and sports is those people have unbelievable stories, right? They overcome illness, loss, whatever. They, you know, a skater falls but then gets up the next day and has an amazing thing. I don't know how to teach it, but I think, you know, I say every week, it started with my kids, and I adopted to now every Monday on what we call Blackstone TV, which is our internal Zoom call. I say, stay calm, stay positive, never give up. And it is really sort of my mantra, which is invariably things are going to go bad, but it's about the attitude you bring to it. And if you say, no matter what it is, it's a medical diagnosis, it's a family thing, it's something that's happened in your personal life, you get hurt, you get a bad grade, your career doesn't go. The idea that you get up the next day and say, hey, I'm going to figure this out. I'm going to learn from this. I'm not going to focus. I'm not going to blame the refs. I'm going to figure out how I can overcome that. The people who have that in them tend to have a much higher rate of success. And I think the hard thing when you're sitting in your seats is to recognize, like, you think that the people sitting up here, like, this is how it looked like. But no, it didn't look like that. It looked like this. That's how it really looks. And so I don't know how to teach it, but I would just say, if you can bring that sort of level of optimism and the ability to sort of get through and recognize bad things are going to happen, but there's sort of a pony in there somewhere. I'm going to get to the other side. If you can bring that, I think your chance of success in almost everything in life goes way up.
Thank you so much, and again, thank you for being here.
Okay, right in front. And then we'll go you next.
Firstly, want to say thank you so much for being here, and Kogod for putting on this event. This is spectacular. I graduated a while ago, so I won't say what year, but business administration and sustainability management, so did my undergrad and master's. I'm currently working actually at a hyperscaler on their data center sustainability work. But don't worry, I play golf, so. Can
I ask you, do you feel good that they're focused on sustainability?
I am. I will say it's very grassroots right now. We're trying to really make it stronger programmatically throughout the company. But yes, it definitely makes me optimistic. Of course, still very technical and figuring out the implications. But to stay on the sports theme, I'm curious, and this might feed in from the resilience question, can you speak more to being a multi-tool athlete? I think nowadays a lot of roles are demanding more from students and from early career professionals. So if you have any words of wisdom around how to be a better multi-tool athlete, that'd be great.
Well, it's a hard thing. I don't think any of this stuff comes naturally. I mean, you may have been trained in business or accounting or engineering, and so you have a certain skill set. I think most of it just comes from doing. So I think pushing yourself to do things could be public speaking, it could be taking a trip, taking on a new responsibility. I think raising your hand to take on these new things is always positive. And I think too often, most of us have a lot of insecurity, and we're like, I'm not really sure I can do that. Somebody else should do that. I think your best chance of developing a skill is saying, you know what, I'll figure this out. And so, yeah, I know sustainability in this area, but maybe I can learn something over here. So it's an openness to learning, a willing to take some risk. And I think most people here, you're obviously very smart, you've gotten to school here, you work hard. I think you're more capable than you probably realize, and it's a little bit about pushing yourself. And then whatever that thing you're now doing, you probably have to take a few steps back and learn a lot and be humble about that and willing to put in the effort.
Just make it up. Yeah. Okay, right here, a couple rows behind you.
Hi, thank you. Thank you for sharing your insights and your experience. My name is Victoria. I'm an undergrad student at International Relations and Economics. kind of unrelated here, but like, I just want to know, what's your daily routine look like? How many hours of sleep do you get every day? Like, do you eat breakfast?
I love this question. I get up typically, I don't know, 6:30, something like that. I have a cup of coffee. That's a good way to start the day, I found, no matter what time zone I'm in the world. I try to read what's happening in the world. I'll look quickly at my emails, texts, see if there's anything going on in Asia or Europe or where, something that I need to address. I like to see what's happening, so I'll look at Bloomberg, Wall Street Journal, Financial Times, maybe the New York Post to check the sports scores, whatever. I will try to get through as many of my emails so that when I get to the office, I'm caught up at that point. I walk to work, I get to work, and then my day, if I'm not traveling, is generally chock-a-block between investment committee meetings, sometimes meeting with group heads, meeting with external, our clients, could be political people, just like da-da-da-da. If I'm not traveling, I will try to get home for dinner. And then I will generally read until 11:30 or something, and clean up the emails I didn't get through today. And then I'll get up the next day and do the same thing. I know it sounds hugely depressing. I apologize for that. And then when I'm traveling, it's really hard because you're trying to, you're speaking at an event, you're meeting clients, you're meeting with a portfolio company CEO, and you may be on a different time zone and you're falling behind. So there's a certain relentlessness to it. But I would say the key things I try to do, I ideally would like to get 6 hours of sleep in a 24-hour period if I could do it. I try to stay informed what's happening in the world, and I try to be responsive. I think one thing, if you wanted to take away, is whatever time zone I'm in, I try to return the emails I have. Even if I can't read the whole attachment, I'll say, hey, got it, because it's a sign of respect to the people who've reached out to you. When you ghost somebody, that is not great. So I try to be highly responsive, and it's something, if you are running an organization and you're highly responsive, then the people who work for you are highly responsive as well. I'd also say I also try to be timely. I was almost late here, which would drive me completely crazy, but I try to be punctual on the things because, again, I think that's a sign of respect, because if I'm showing up late, it's saying my time's more important than your time. So, and then the weekends, I try to spend a little more time with my wife and family, but I spend a lot of the weekends reading. That's what I do during a lot of the time, get through a bunch of investment committee stuff and go through it again. So I know, as I said, it sounds depressing, but I love what I do, and I love the challenge of it, and I love the people I work with, and I'm just like, this is what comes with the territory.
Have you ever tried using AI to automate some parts of?
I'm sure there are things I can do that are more efficient. I'm sure.
Okay.
One more?
Okay, let's do one more right behind you. You can pass it to the woman in gray sweater.
Hello, thank you so much for being here. My name is Valentina. I'm a senior studying business administration at Kogod. And my question is, a lot of senior leaders talk about learning how to influence a room. How did you personally develop that skill throughout your career at Blackstone? And what advice would you give early career professionals for learning how to do this?
I think the most powerful thing in influencing people is to have deep domain expertise in what you're talking about. So I don't wing it at a lot of things. Maybe this, but I would say most things I show.
Bumble questions, maybe.
Yes,
but yeah.
yes. But most things I want to be prepared. So it doesn't matter if it's meeting with some senior leader in the world or heads of a CIO of a huge pension fund, or if it's an internal meeting, I want to show up prepared. Because if I don't have the facts, I can't influence you. But if I feel like I've got an insight, I understand something, I have a message, then that gives me the confidence to try to convince you of something. And so I think, again, the knowledge, the learning, the reading, all that preparation around whatever it is makes you feel better. And when you get a question about, should data centers work in space and you don't have a lot of knowledge, it's harder. It's harder. So my advice would be come prepared. And honestly, you can rehearse your answers. If you're going to make a pitch, you're working at a company, you're going to try to convince a client or an investment committee or whatever it is, you prepare how I'm going to answer that question or how I'm going to make my pitch. Because I guarantee you the fourth time you do it will be better than the first time. And you'll feel more confident when you walk into the room.
So we have a little gift for you. I'm going to ask Sean Graham, who's the head coach.
I love that video.
Mr. Gray,
you
I'm
did.
actually recruiting you right now, so I appreciate that.
And I'm going to ask, come on up, and then Caden Cluth, who's a senior, he ran a 4-minute mile, and he's trying to break 3:59. And then Shaylin Brochu, who's a freshman health sciences, and she won Patriot League Freshman of the Year runner. So come on up and.
Wow.
Mr. Grant, basically, I just want to thank you for your insight and your information, but also for your advocacy for track. And clearly, as we saw in the videos, it's important for you. This is Caden. And,
oh my God, I love this.
So we want to present you a commemorative jersey of our own that has your name on the back, so you can
Oh my
wear
gosh.
that as you'd like.
We'll get a
By the
picture.
way, these are real runners. I'm someone who fakes it. I love
Well,
this.
compared to Dean Marchick, you're still on recruiting.
I had the video said I run a 14-minute mile. I think I could break 13, but anyway.
Have you guys watched Chariots of Fire?
No, it's an age thing.
Oh my God. You got to watch Chariots of Fire. Maybe Breaking Away. I don't know if, do you remember that one, the biking one?
Yep.
Chariots of Fire for both of you. Okay.
right, so let's
We're
get a
getting it. We're
picture.
doing a shot. Okay. Here we go.